Hello guys, glad to have you on board again. Today we're gonna make a special video regarding what Wall Street's been doing today. Lots of things to talk about, but first thing first, we're gonna start with setting the ground rules in here. What happened today is nothing close to a buy the dip situation, nothing like you want to buy. You want to think twice, because what you want to buy in a buy the dip is generally wave 4 kind of buy the dip. Which is nothing close to what we have in here, as the wave 4 has been done and cleared in here. So what we're doing in here is probably a wave 1, and wave 1 you don't want to buy them. This is where most of the trend traders are doing wrong. So be aware that what you'll see all along, abroad in here, all the social networks, all the TV shows or whatever shit this is, they're gonna tell you a buy the dip situation is down the road. Don't listen to them. It probably is going to make a dip, but not a dip you want to buy, and probably is going to be lower than expected for many reasons. Now, there is still some stocks you might be chasing for buying entries, and we're going to cover up today. It's never all red, it's all just shaded gray, and you need to find out what to do if you absolutely want to do something. So, first thing first, if you were highly invested into stocks, I hope you have listened to my previous warnings saying that you should fucking get the hell out of here, or at least secure the gains, lock the gains by reducing leverage you might have or your exposition to the stock market, because heavy risks were down the road and they are now showing up. So what's happening today is the risk picking up, and it's not going to stop for many variable reasons that we're going to cover up today. So we're early stages of a market reversing to bear market. So probably what we've done in the latest few days is the market top. We're probably not going to retrace back to those values for many reasons. There's still some chances, but we'll see about tomorrow's trading. Tomorrow is going to be a key element to forecast what's coming next. But I strongly expect that we're going to have some more bearishness. If the bulls manage to find their way out of this, really is going to be a cheering scenario for them. But I don't think that's possible at that point. What we've done today is nothing close to what can happen in a bullish market. You don't make a minus 5% day in a bullish structure. Moreover, we've been showing some very concerning signs of bearish activities recently, meaning the bears are taking it over. The price structure clearly confirms that we have a crashing market potential. So leading me to believe, first we're going to review what those conditions are. You need to have a parabolic asset scheme, which we have right here. As you can see, waves are totally stupid. We've got low volatility, low volumes, and very high pricing rising, meaning that investors are not interested to prices, and that retail traders or whoever this is just letting the price surge and let go as high as they can. And then you got the first shock, what we had earlier that week. Clearly I knew the pattern was moving forward one step at a time. We had volume and volatility peaking again in the market. This is a sign that the bubble is moving forward, and like the next step is the crashing step. How do you see the crash? You want to see the volume dropping again below the 20 average. We're in a weekly chart, so 20-week average. We've been dropping below, remaining below for several weeks as the prices has been surging again. And then you want to see this, the market reducing strength, losing momentum, diverging in terms of momentum, and then you want to see the volume picking up as the price stopped to break resistances, and you want to see the volume surging when you break through support, which we've done. It's now in front of us. You cannot deny it. This is clearly a basic structure of a crashing market, suggesting that what we've had now is probably just the beginning when it comes to NASDAQ. When it comes to S&P 500, which is right here, this is a totally different thing, because for many reasons what we have in here cannot be related to a crashing market, because the structure here is very different. Okay, what you see there is nothing close to a parabolic scheme. So, yes, this is a bull market, but bubbles and bull market don't reverse the same. Bubble market crashes, and when they crash, they return back to the previous volatile level and they break through this. So in terms of NASDAQ, what you can expect is probably this. okay, going there, breaking those lows, and then retracing in a dead cat bound structure, generally retracing 61 to 76% maximum of the bearish impulse, okay? But we're going to have a totally different structures when it's probably going to come to the SPX for several reasons. Because the market structure isn't the same. So the way it's going to make the correction isn't going to be the same as well. For obvious reasons, okay? Market flows in and flows out because of the structures of those who are buying and those who are selling, the price to volume structure. We totally have two different things when it goes to comparing SPX and and NASDAQ, for a reason that we're going to explain right after, which is what we call the difference from value stock to growth stock. So clearly we're going to talk about this today. Don't worry, I'm going to translate those things. I've been making this for the French users right before. Okay, so NASDAQ has been concentrating most of the growth stock, which means during that leading sector in that economic cycle, obviously tech has been one of the most valuable ones, the most growth predictive ones. They've been leading and outperforming the benchmark. The benchmark is the S&P 500 and will always remain that way. So clearly outperforming, as you can see, on that economic cycle. If this really happens to be the market top, it's still a little bit too early to confirm that, but I'll take the risk as this is my job. So I stand on this. To me, I think we made the market top, and we'll see how long this can last. But I think several years are down the road for that price. So if this turns out to be the market top, then, as you can see, market S&P, so broad-based growth, has been creating 400%, nearly 400% return back from the 2009 bottoms. So it's pretty great. It's been multiplying the prices by 5. So this is nothing that you should forget about. This is huge. This is nice. This is a normal stock return. Then you've got the NASDAQ. Clearly different price structure. Clearly a lot more bullish. We've been creating 7 times, so nearly 8 times the value since the 2009 bottom. So clearly, do you have to face that most of the NASDAQ stocks are growth stocks because they've been outperforming the benchmark. They've been creating growth, and these are those who've been leading the gains into the overall economic cycle. They generally have some characteristics. The sector is going to be leading the market. Sector leader of market. Okay, so clearly this is where everybody was talking about. You needed to have those stocks in the portfolios because they were the growth stocks, and this is where you make money. Okay, so overperforming. Overperform the benchmark. All right. What it says is PE ratio, so high PE ratio, generally minimum above 15 and generally above 30. Okay, let's say 25. Okay, this is where they start to get expensive, and you have got some values, some stupid values, like for example Amazon's been reaching 200 at some point, so I don't even remember how high the number was. No matter how stupid this was, people will keep on buying for future profits. Okay, and generally those values does not or low dividend. Okay, because they are growth stocks, so they need huge investments. They're generally maturing companies. Like Amazon, like Apple, they're maturing. They're getting their highest valuation and probably won't get higher in years, and they'll just digest how high they've been priced. They've been overpriced because they've been part of the growth creation in the economic cycle. They will obviously have most of their value destroyed in the bearish market that will retrace afterwards. Okay, so probably you can expect most of the big losers of the bear market that we could face in the next years is probably going to be those who've been the most gainers. So Apple, Facebook, all those you've been hearing about, they will probably suffer huge losses in the next few years. But of course, doesn't mean they're going to die. They're just going to lose and surrender the stupid gains they've been making because we were expecting forever growth like we forever do. Each and every different economic cycle still sees the same stupid reactions as the growth stock will keep on growing forever as they don't. Whenever we still have clear signs that we're overpriced, clearly overpriced, you'll still see some stupid perma-bullish guys telling you that we're going to go forever. I mean, no, at some point everything has to stop, and I think today we had that breaking signal just flashing red. So, growth stock generally will be part of indices that outperform the benchmark. So, clearly what we have, okay? So, the stocks you're looking for, growth stock, typically Apple, things like that, Amazon, growth stocks. So value stock on the opposite is something totally different. It's generally a sector that has been missing in the that have been deceived by investors. They've been letting it go even if the market was going high. Okay, so deceived by investors. Okay, it generally underperform the benchmark. Okay, they have a PE ratio that is low and generally below 10, meaning the price is really interesting, and they do distribute dividends because that's the only way they can keep the investors in and prevent them from flowing away. So they distribute lots of dividends. Okay, lots, not generally a lot. They do what they can, but they're holded because they cannot create growth because the tiny profits they make has to be given to the investors to prevent them from flowing away. Okay, so value stock, we're going to take a great example right away. General Electrics clearly is a stock. So we're going to add this one in here. I'm going to add the compare. GE, General Electrics, yes, company. All right, I'm going to pin it to the right. Scale to the right. So clearly you can see underperforming the benchmark pretty damn solidly. So it's been a lagger, and not just a tiny lagger, big hell of a lagger. So it's oversold. It's near the structural prices of the asset, and we're far from the mean, from the average, from the moving averages. Okay, moving averages are probably right here, right now. And I think that's the price we could forecast to retrace to. So on those assets, you're not generally looking to create growth. You're just looking return to the mean kind of situations and retracement perspective to eventually create growth in the future. But those assets is generally safe haven kind of thing that the market will rotate to when it fears for trend. So generally, you can see it that way. This is what has been outperforming. So all the Apples, the Amazons, things like that, clearly outperforming the benchmark. And on the opposite, you got a value stock, which is clearly underperforming, clearly oversold, and at structural buying prices. So investors will now probably seek for those values and seize those and let go with those ones, which means we're just going to make it kind of a return to the mean out of the benchmark. But the problem is that the benchmark has different weighting inside the index, which means those stocks weigh a lot more than those ones in the benchmark, which means the benchmark is going to lower. Obviously, the SPX will drop valuation as well, no questions on this one, but probably going to have to suffer less losses than the Nasdaq will because everybody is going to return to the mean. So those ones will be gainers, and they'll probably wait a bit on the big losses that those ones will take. Okay, those ones probably going to collapse 20% from the market top. That's the minimum, so probably a 20-25% drop, and can even go lower than that. If the Nasdaq goes there, don't be surprised. Okay, so probably can expect a huge drop in Nasdaq's valuations, and probably the big gainers will lead the loss. And then those tiny but yet interesting stocks will be probably sought and demanded by the investors. So some things will bring some money in, some things will take the money out. So probably you can expect lower losses on the SPX that you'll have in the Nasdaq for that reason, because the market is going to make a rotation, not a sectorial rotation. They're going to go from energy to things. It's not going to be the purpose here. It's just going to be a movement switching from bull market to bear market, and generally this is a lot of growth stock for the research of value stock to just lower the drops, and then everybody's going to drop. So value stock will probably retrace. Doesn't mean they go higher, but probably most of them will just retrace and make new lows afterwards. Probably not going to be the case for GE. This one is a special one, but I take this one as an example because it really is an oversold price asset that is probably going to be surging in the next few weeks for that reason, because it's probably going to be a sectorial a rotation from growth to value, just to hold the benchmark to prevent from making big surging losses. But I do expect the market I'm sorry about that. So we're probably going to have to break some stop losses in the SPX as well, so you can expect the market to go below those lows, where the Nasdaq is probably going to make new lows out of what was done in February, which I think the SPX is not probably going to do right now. It's just going to narrow price range, making some wave one kind of stuff. So breaking some supports, but probably going to have a deeper retracement afterwards. So I think the SPX probably going to retrace at least 76% of the losses it could make in the next following days. Okay, so if you take the SPX in here, I think we're going to drop lower. We're probably going to have to retrace probably up to the previous market top or slightly lower to find some huge resistance. So the market is not going to switch bear market right now. In order to get bear market, you're going to need to make lower lows and lower highs in a set, which is not going to happen for now. And we're weekly charting here, which means lots of weeks ahead before we officially switch to bear market. Okay, take the example in here, which wasn't a wave one, but if this was this would have been a wave one, we would have made wave two. So as you can see, dip retracement, and then the wave three in here would have kept on going and break down support. So difference in here, you're going to expect a crash, which means low losses of a very big loss of valuation in the first wave, then retracing 61-76% maximum rapidly in a dead cat bound structure. So the market tries to recover, but it doesn't, too much sellers, and then the market crashes, which means it takes more time. Okay, this one is really the most impulsive wave. This one takes more time, but go low deeper than the previous one. We're gonna go much lower than that in the SPX, in the Nasdaq. Then you got the hope phase. Remember that. Everybody's gonna think we're gonna go forever, and it's not gonna be the case. We're gonna suffer another loss. Okay, just apply what we've been teaching in the Bitcoin. Probably is the exact same thing that's gonna happen to the Nasdaq. In the meantime, the structure in the SPX will be different, because in here we have a bubble, so we're going to have a crash. In here we just got a rising bullish stock market, which is absolutely normal, broad-based, not going to have to suffer big losses in here for the reason we've been explaining. Most of the money that's going to flow out in here is going to flow in somewhere else and compensate for the losses in the broad-based index. Okay, so we're going to have this probably, market expecting some more drop in the next few weeks. Okay, I expect the market to make the dead cat bounce in here as well. Okay, probably going to make some strong retracements. Okay, it's going to take time. I think it's not going to take just a couple weeks. Okay, it's going to take time, clearly, but typically a wave one kind of structure in here. And then, I mean, the market will range for a long time. I mean, probably you can expect something like that. It's going to range before it goes to bear market. And this is where you're going to have the big losses, okay? It's going to fall, not fall really quick, but it's going to fall consistently. A lot more sellers than the buyers we could have. Probably in here, previous market top, we're going to find some buyers again. Same timing as the rebounds in here, okay? I don't do timing, so don't watch for the timeline saying, okay, we can expect a dip in June 2019. Not at all. I don't do timing. All I do is cycles, and cycles can vary in timing. That's the only variable in here. So probably you can expect some rebounds to make in here, probably a wave 4 to happen there. Okay, expect some wave 4 pullback. Okay, and then probably the final wave 5 that's going to be dropping to very interesting broad-based buying entries. Okay, so this is what probably this stock market will look like. Okay, You can expect this to last long as well, okay? Probably the market in here will work that price area for some time, okay? Right? Create a range and then suffer another subsequent loss. It's an A, B, C correction, okay? There you're gonna have the underlying wave 4 in here. Sorry about that. Should have made that earlier, okay? So you're gonna have a wave 4 pullback probably in here. Okay, so it's gonna be 1, 2, 3, 4, 5. Okay, wave A, B, C, range, and then 1, 2, 3, 4, 5. Second bearish impulse, retracing to major supports in here, probably slipping a little bit below just to fuck up some stop losses. But probably in here will be mature enough to buy the SPX. If you do the exact same structure on the Nasdaq, it's probably going to be something like that. Nasdaq is going to go there, trying to pump again, but it's going to lose a lot more valuation, probably reaching out to the same levels. Previous market top of 2015, going to retrace in there. Nasdaq's going to take some gains. Okay, hope phase, so same thing. Then probably this is where the Nasdaq's going to suffer bigger losses, but go exactly the same level. But obviously, as the SPX hasn't been overblowing at the end of the cycle, we won't necessarily need that overblowing to the downside that probably the Nasdaq will have. You can expect the Nasdaq in here to make some brutal V-bottom structure. In here, you can expect the Nasdaq to make some sudden drop. In here, brutal drop, and then recover. So probably in here, it will have to suffer bigger drops in the Nasdaq. Okay, and I expect the Nasdaq to go lower. Probably gonna break those low and go there. Okay, so you can expect this one to be like that. All right. So this is what the stock market should look like if we compare broad-based and non-broad-based sector. The losses will be the same, but in terms of structure, this will look like a 5-way structure because the first wave will be so big that it cannot be ignored. Where it be narrow, a narrow shock, yet a shock, still be going to be a shock, but it's going to be narrowed and dampened in here because most of the rotation is going to come from growth to value, which is going to dampen the losses we could see on the broad-based index. Okay, so in the next following days, if you absolutely want to buy something, have a look at value stock instead. Stocks that are oversold, underperforming the benchmark, have an interesting PE ratio. You don't want to buy bullshit, okay? You don't want to buy shit stock. You want to buy big stocks like GEs, some that have a name but have been oversold. GE clearly is an example. So take this one as an example and try to reproduce and find some similar assets that have been overblown to the bearish side for not necessarily extensive reasons, and those stocks might be just bought to target retracement and in order to just try to put the money somewhere, because the money is going to flow out of those big growth stocks. It's probably going to go into gold, into some other asset, safe havens like the yen and the gold. And those things were probably going to make huge gains in the next following days and weeks, as obviously the money will go there, the bond market. But it doesn't mean the market will just let go with all the stocks. It's just it will let go with a growth stock because the growth that we were expecting in the economic cycle are now out. The market sees that. There's no longer going to be growth unless we've got a major change into, for some reasons, central bank policies or something like that. Until something blows up what we've done today, which I see very less likely to be, everything points us to the fact that this is it. We have it. The market top is here, and those who will keep on denying it will just fail to profit from it. So I think it is about time to use the words the way they meant to be, but of course only speculators like me will just stand for them because I accept being wrong and I don't fear being wrong. Most people in here just fear to just tell something out loud and being proven wrong. So yes, this show is recorded, and if I'm wrong, you can use it against me, no problem. I stand on this. I don't fear being wrong. It's part of my job. But part of my job is also to be right sometime, And when I'm right, of course, I'm taking the move right from the top to the bottom, which is something that generally people are meant not to do. I mean, you're told that for some reasons, no one picks the market top to the market bottom because most traders just follow the trends. That's true, but you are still having some aggressive traders like me who take the risks to chase the tops to the bottom. So of course I'm making a different job, but my job in here is to stand for what I think, and I strongly think that we found the market top. Alright, so anyway, future will tell. We're gonna stop this show right here. I've given you all the information I wanted to share with you guys. So today's information remains, for those who didn't know about that, really you should dig a lot inside value stock, growth stock, how to pick them up, how to make the difference pretty easy. It's not a complicated thing, but this is something you might want to know if you do trade stock indexes. And of course, how this can be implied into a trading strategy, how to manage the risk if you do trade all the US indices, you want to trade them differently regarding both the volume structure they had, the price structure, and the composition. Okay, their yielding is going to drive everybody to the downside, but the problem is they're going to have different amplitudes in terms of losses and retracement, and this is probably going to favor a lot the value stocks and gonna let go with the growth stocks. We're probably gonna have to suffer subsequent losses in the next following weeks, and it's supposed to be brutal, so you can expect the Nasdaq to keep on following. We're gonna make a final assessment in here before leaving, because I've done that for the French users and I will be ashamed not doing it for you. So I'm just gonna delete that, and I think the SP, I'm gonna give you the levels in which I will reinforce the Nasdaq, because it's a question that the friends have been asking. So, as you know, I've been selling market top. Once again, just the speculators will have this one. That's not a big news. That's not a big news. I'm pretty I'm pretty used to this. Okay, so this is what we have, and generally you can expect the market to keep on following this. So we need a price structure. Okay, it's a bearish impulse. So what we have in here, god damn it. What the freaking fuck? Alright, so the thing is that this clearly is wave 1, tiny wave 2. We've been making wave 3, still not terminated, so you can expect tomorrow to digest. So probably going to make lower lows tomorrow, and not necessarily going to be a big bearish day. We're probably going to have to break that support in here, 6,937. Probably going to have to break this one, but I think tomorrow is going to be more of a range day, so finding a bottom, trying to find a resistance. Obviously we're going to break the support again, I think a few days after, so you can expect this, but I think the market is going to create a dip in some daily to weekly perspective. Okay, so I think probably we terminate Friday in here. Next we're going to break to new lows, try to range, create a resistance. Okay, so find a bottom in the daily chart, find a bottom and then a resistance in the weekly chart. But I think once we've done that, we're going to have to suffer a fifth bearish impulse. Generally, in a crashing market, you'll always see this building this way, which means we've got a wave 4 retracing, and then the market will just downgrade slowly. You're going to have tiny waves heading to the bear side, kind of looking like a range, a battle from bulls and bears, because the bulls will try to seal this thing, creating a V bottom, and obviously there will be too much bearish demand in here, which means we're going to grind our way down and then accelerate, and then the bulls will surrender. This is where we're probably going to have to suffer vertical losses, something like that, but even more brutal. You can really expect that this final part in here would just be a few candles like that, but even worse than what we faced here. So wave 1, 2, wave 3 bigger than wave 1, and probably wave 5 even bigger than wave 3. That structure generally is V bottom, so you don't want to miss the shot in here. You want to highlight that structure. You want to highlight that price previously. Why we could get there, okay? You're going to highlight those breakout levels. We're going to break this one probably as well, and we're probably going to break this one also. Alright, so in the daily chart time frame, you want to break those two. Sorry, in the 2-hour chart time frame, okay? You can forecast the price to probably do this. Okay, slowly grinding and then accelerating to an extended wave 5. This can take much more time. We really don't make timings in here, but for some reasons generally we go to retrace to that trend line, so you can save us some time. You know that normally there is no rush to sell until we get ourselves to that trend line. Okay, so let some time for the market to digest, try to retrace. Whenever we reach back to that trend line, this is where you're probably going to have to short again, okay, and search for the market to work that trend line. Of course, in here it's going to slowly grinding down, but all the bulls will think that they will break it up and accelerate. If they do, then scenario is invalidated. That's simply it, and I'll take the gains, the remaining gains I have on NASDAQ, and just get away. But if it just works that way, market trying to go up but failing it because too much bearish demand, we're going to have this vertical drop in the end, which will be the worst case scenario, because in here everybody's going to panic and you want to buy yourself out of that panic. This is a wave 1, and in wave 1 you don't hold the trades. This is not how it's going to work, okay? So you might want to take your gains out here. If you want to spare some 25% in the market, I can understand that, all right? But you do this only if you've been shorting at the highs, because you're probably going to have 61% retracement. The market probably going to retrace to that price area afterwards, okay? So expect that same thing to do the opposite, all right? It's going to be V-bottom in here. It's going to sharply rebounds, okay? Probably something like that. Generally, this is what the rebounds look like. It's a dead cat bounce structure, okay? So generally, dead cat bounce looks like that, okay? We'll retrace, we make that 2 waves, okay? Goes 61%, and then in here, collapsing again and going crash pattern, okay? This is probably what the market structure is going to look like, okay? So first we go there, we raise all the year gains, and then we see if we stretch to bear market or not. But don't underestimate what's been happening today. Unless it's totally erased tomorrow and the market buys that dip really aggressively, unless this is shown to me, I'll remain bearish and I'll stand on this. I'm not the kind of guy who's going to be a switcher. I mean, I've been having that bearish posture for quite some time. I'm aware of this. I've been wrong in timing several times. Now that I may have the right timing and not going to be a kind of switcher who's going to take the profit at the first support, fuck it. I'm fully bearish invested right now. Not yet leveraged. So this is where I'm going to put the most leverage. I'm going to put a tiny position in here. I've been taking 1/3 of the position off the table already. And I'm going to take that gain to double down on the leverage in here and probably double the leverage, and in here I'm going to take the breakout trade. So this is where I'll trade, okay? In terms of trading activity, this is where I'm going to search for a bearish entry, okay? And search for bearish entry in here, and obviously as well in there as a breakout trade, okay? So when the market will try to find bearish activities in here, I'll try to take trades as well. When the market will fail and go back to those support area, I'll take the breakout trade to accelerate. And obviously, in the end in here, this is where you're going to search for bullish. No bullish, but let's say taking profit. This is where you're going to take the gains. Okay, this is where you take the money off the table. Because obviously a good trade is not only a good entry, it's also a good exit. So don't forget about the exit. It's really important as well. Alright, this is where we take the nice gains. So from the market top, probably expecting minus 20%, which is generally the minimum of a crashing pattern. We could go lower than that. So once again, in here you take the profits, and if the market makes a minus 30%, you don't give a shit. All you care is to be filled in that price area. If it goes much lower, then that's no big deal. I mean, you're not here to take right from the top to right the bottom, especially when you're facing V-bottom structure. You're probably not going to take the gains at the lows. Don't expect that. In V-bottom, you never catch just the bottom. That's not how it goes, okay? So wait for this, and then wait for the dead cat bounce. Alright, and whenever we got the dead cat bounce, this is where you want to make the big leverage short entry to go bear market. Okay? So have the mindset, once again, can be right, can be wrong. We're kind of projecting the market quite some steps ahead, so can very well change in between. This is why we make those daily forecasts, because we can adjust to what the market shows us. But right now, and until I've been proven wrong, I think more pain is to come. But we're probably gonna have to not do it tomorrow. So don't expect the market to probably drop another 8 to 10% tomorrow, even though it's possible. So I remain bearish. So if it happens, I see no problem with that. But I would like the market to build its way down to be able to reinforce the positions. So we'll see if the market just let me do that or just falls apart. But I expect some kind of range to build up between tonight and tomorrow, and I expect the market to just try to recover and then face a more bearishness in the next following days. So bye guys, and hope you learned interesting things today. And obviously, as I said, tomorrow we're going to cover up all the side effects we could have in forex, all the kind of covers we could have in the gold and things like that. So tomorrow is going to be that topic, but today I just wanted to cover up just this topic about the US indices, how we might have found the market tops. And as always, that video was recorded, so if I'm wrong, you can blame me for this, no matter how. For many years, if you feel like you want to do it, I don't really give a shit. I'm just doing my job, and I stand for what I say. Bye-bye.